Yes, people, a very happy evening to all of you. So, guys, we started with accountancy subject in the last class, and the very first chapter we have begun, guys, which is Introduction to Accounts. So, let me give a quick recap of what we did in the last class. Then we will head forward towards the new concept for the day. So, guys, we learned that, sir, accounting is a systematic process. It is a systematic process. We have to have system in place. Why do we have to have system in place? If we don't have system in place for a given set of question, for a given set of problem, different people will try to work out solution in different ways. So if I have to relate this, I will relate to the example that I gave in the last class, wherein we took this as an example. We were dealing with mobile phones and we had purchased 10 phones at the rate of 10,000 each and sold 6 phones at the rate of 30,000 each. Expenses done to sell these phones by 10,000 rupees. So do you all recollect that when we try to figure out answer for this particular question, the question was what? To calculate the profit and loss. So the answer what we tried to find out, people came out with different answers. Why? Because system was not in place. Now you are in process of learning that system. So now when system is not in place, you saw an example live among ourselves that how people came out with different answers. So profitability amount was differing from person to person. So therefore, it is becoming very important to have system in place. So what does accounting mean? Accounting means to count. At the end of the day, what are we trying to count? We are trying to count what is my total purchase. We are trying to count what is my total sales. We are trying to count what is the total expenses. So we take a difference of all this and we're trying to count what is the profit. So ultimately, accounting is all about counting. So accounting in very simple terms in a layman language means to count. Accounting means to count. Coming back, accounting is a systematic process of what? Of identifying. What are we trying to identify? First, we have to identify a business financial transaction. So in that we learned transaction is an activity that happens between two or more people. In that, one person is business, another person is the third party. So transaction means any activity which is happening between two people. Second, finance. This transaction should have some monetary value attached. It should be in terms of money. So there should be a financial commitment towards it. And these financial transactions should take place in the course of business. Now imagine a scenario that all of us are going to theater for watching a movie. We have purchased movie ticket. We are buying popcorns. We are nicely seated in the cinema hall and enjoying the show. So can I call this a transaction? You buying tickets from cinema hall. Can I call it as a transaction? No? Yes, it is a transaction. It is a transaction that is happening between us and the cinema owners. That is the theater. Is it a financial transaction? Yes, because the monetary value is attached. It's a financial transaction. Financial transaction means what? When the goods were exchanged or the services were exchanged, you had a monetary value or a monetary element attached to it. So it was a financial transaction in the course of personal life. So was it in course of business? No. So we going for a movie or buying a popcorn is not got anything to do with business. It is purely a personal financial transaction. So can I record the personal financial transaction in my business? No, I'm concerned in business with business financial transaction. I want to derive the profit and loss of the business. So how do I get my profit and loss? Sir, from income, if you minus expenses, you get profit. So which expenses I need to take into consideration? I need to take the business financial expenditure. So if I take personal expenditure also into consideration, what will happen? The business profit will come down. So the profit what you're calculating, is it a right profit? No. So that will be a wrong profit. So it is very important that you identify a business financial transaction. Yes or no? Once you identify a business financial transaction, it has to be measured in terms of money. Measured in terms of money, what? It has to have a monetary value. Not only that, if any business is dealing with multiple currencies, if they are exporting the goods and services outside India, then they will encounter the transactions in the foreign currencies like dollars and euros and yens. So can I record the dollar value, yen value, or the pound value and INR value, all value together? No, it will lead to confusion because all of these monetary currencies have different monetary values. So we need to have a equal denomination. We need to have equal denomination. In India, the currency that we follow is INR. We follow INR. So everything you have to convert into one single denomination, which is INR. so that we can derive the exact profit and loss. So measuring means you have to measure in common denomination, which is INR. This is second point. So these two things you do mentally in your mind. So this is the mental calculation that you do. Nowhere here the accounting is actually begin. Now the accounting actually begins from the next stage, which is recording. Recording is the first step of accounting. This is where the practical work begins. So recording. So how do I record? Can I take a piece of paper and just record anything? For example, if you remember in the last class, we discussed the example of we going to theme park and spending the money. So when we received that 5,000 rupees from dad, what did we write? Amount received 5,000. Then every time you spend the money, from that you said that, sir, for bus ticket I spent so much, so less. I spent so much for breakfast, I spent so much for the entry fee ticket. So just like that, from 5,000 we kept on subtracting and we got the final what is money in hand. Can we adopt that methodology in accounting? The answer is absolutely no. That format is for a layman. Layman means for a person who does not know accounting. In accounting, everything is done in a very structured and a systematic way. You cannot record anything in account just like what you feel or how you feel. There is a system and process. So here the recording happens through journal. So you have an exclusive chapter on journal, and we will understand for each and every transaction, how do you record a journal entry? So journal, I'll not be discussing too much today. Just understand that this is a cycle which we have to follow. And the journal, what you record is basically to be done in the chronological order. Chronological order means what? You have to record the transaction as and when it takes place. Within a day, the transaction, multiple transaction that is happening in a day, that you can shuffle. But that day's transaction, you have to capture that day itself. You are not allowed to carry forward the transaction to next day. You cannot say that the money which I spent today, I will record it tomorrow. No. If any transaction is encountered today, it has to be recorded today only. If any transaction is recorded tomorrow, it has to be recorded in tomorrow's date only. So the order is very, very important. So recording takes place through journal. So if I remember, I gave an example where journal is like this bucket where all the transactions as and when it takes place. For example, the first transaction, purchase transaction, you'll record in journal. Next transaction, if it is sale, you record again second entry in this bucket. Like that, as and when the transaction takes place, you keep on adding the balls in this bucket. Now, if I ask all of you that, please collect all the black balls and give me. Please collect all the red balls and give me. Will you be in position to do it? Yes, but it take a lot of time. In business, can we afford to take such a time? For example, you are accountant of a business or you're a chart accountant of a business. Your owner says that I want immediately the report of this. I want to know what is my total purchase. I want to know what is my total sales. I want to know how much money I have to pay to this fellow. I want to know how much money I should receive from this fellow. Can you take your own sweet time? Okay, sir, I have a box. In that box, there are multiple balls. I will take my own sweet time to collect all different balls. What will he say? Get out. He's like, get lost. So journal is a mechanism where you record all the transaction chronological order. Journal does not facilitate the addition of these items. So to facilitate addition and subtraction, what we do is from journal, we shift all the transactions in individual box called as ledger. The process of shifting from journal to ledger is called as posting technically. It's called as, the word is technical word is posting. The process of shifting the balls from journal to ledger is called as posting. I'll be discussing about posting when I do the ledger topic. So in ledger, what happens? You create a orange bucket. You create a red bucket, blue bucket, green bucket. So all the orange balls will go to orange bucket. All the red balls will go to red bucket. All the blue balls will go to blue bucket. So in that, you will be able to segregate, classify. So you classify all the different transactions in the same group, and then you will be doing the total then and there. You'll be doing total then and there. Now, if somebody comes and asks you, tell me what is my total sale? Immediately looking at the total, you tell, okay, this year's total sale is so much. This year's total rent is so much. This year's total salary is so much. So you need to classify, which means for the purpose of totaling in the form of ledger. From ledger, you will summarize all the data. What do you mean by data? Purchase is data, sale is data, rent is data, salary is data. Everything is scattered. Everything is scattered. You need to align everything in one place. Guys, what is my first and primary objective? Profit and loss. How do I get my profit and loss? Sir, from profit, if I minus loss, I'll get my, from my income, if I minus my expenditure. From income, if I minus my expenditure, I'll get my profit and loss. Which means it is important for all of you to bring all the incomes together. Sale, is one income. Like that, there'll be multiple income, multiple bucket for incomes. So all the bucket you need to bring it to one place. Expenditure, I want total expenditure. But now here, purchase is in different bucket, rent is in different bucket, sale is in different, salary is in different bucket. So I need to bring all the expenses together so that together income, together expense, if I minus both of them, I'll get the profit and loss. So the process of bringing all the items under one roof, under one common place to achieve the desired result, that is called as summarizing. So summarizing, under summarizing, there are 3 steps that you have to do. First step is you have to prepare a trial balance. Now, what is a trial balance? How do we prepare it? What is the objective behind that? We'll understand logically when we do the trial balance topic. Once you prepare a trial balance, from trial balance, all the item will go to the P&L. Which item will go to the P&L? Sir, all the item which are in the nature of income, expense, gain and loss. All the items which are in nature of income, expense, gain and loss will go to my trading and profit and loss account. I put here P&L account, but here P&L account means trading and profit and loss account. So from the trial balance, all the items which are in the nature of income, expense, gain and loss will go to my trading and profit and loss account. Everything else will go to my balance sheet. What is that everything else? We'll understand eventually. This is the process that you have to follow. Now, once the summarizing is done, you have the desired result, because the profit and loss account will give you the profit or loss. The balance sheet will give you the financial position. So whatever you wanted, you have achieved it. Now, once you achieve the desired result, you cannot stop with that. You need to analyze, interpret the data. You might have thought that this year the sale target is 10 lakh, but you got only 9 lakh. So don't you want to know why you lost 1 lakh of sale? Hello? Yes, no? You forecasted that your expenses will be only 6 lakh rupees, but your expenses turned out to be 8 lakh. Don't you want to know why there is an increase in expenses? What is the reason behind it? You want to analyze all that. Why? Only when you analyze, you will get to know where you're going wrong. And once you identify where you're going wrong, you can take corrective actions. You can take corrective measures to not repeat those mistakes in the future. Correct? Now you have data. What do you do with data? You analyze data and identify the leakages so that leakages could be tapped. Now, once you analyze the data, you will not keep the data to yourself. You will want to inform this analysis report. You would want to inform this analysis to whom? To multiple people. In that multiple people are the first person is owner. There's who's preparing all this. Owner is not preparing all this. Owner does not have time to do all that. All this is being done by accountant or a professional guy, let's say chart accountant or a CMA or somebody like that. So when all this has been done by those professional people, the final result has to be communicated to the owner. We call them as users of financial statement. What is financial statement? Trading, P&L and balance sheet. These both documents put together is called as financial statement. So I need to communicate the result to the users of the financial statement. Users means what? The person who is interested in the trading, P&L and balance sheet, who is interested in the financial statement. I need to communicate the information to those people. Who are they? The first person is your owner, boss. Second person is the investor. If there is any additional investor of the business, you need to inform the investor because he has to know what is the result of the business. As the owner promised, whether the company is into profit or not. See, owner is different, investor is different. For example, all of you might be knowing this Paytm, Zomato. So all this have raised money from whom? Investors. So owner has initially started the business with little bit of amount from his side. But when the business is requiring huge amount, they cannot provide that money. So they will go to the big investors who will invest in such business models to earn more profit. So what is attracting the investors to invest in the business? Profit. What is attracting the investors? Why is investor investing the money in the business? For doing correct. No, obviously his motive is only profit. So will he not want to know the result of the business? So the second user, what you will try to communicate is the investor. Third is banker, because banker is given loan to you, boss. So banker would want to know whether are you in position to repay the money or not. If your business is continuous loss, which means this is an indication to the banker that this guy might become pauper on the long run. So it is very difficult to recover the money. Better start recovering the money now itself, or it's gone. If you give very good result, so banker will be relaxed. Appa, I gave my money to the safe hands. He's properly utilizing the money. He's having proper profit, because if profit is there, only then the banker will get interest from you. Without profits, from where will you pay interest to the bank? Well, if you understand what is interest, you have to pay money to the bank for the money what you are using. Then government is relying on this profit because on this profit only you'll apply the tax percentage, boss. So if the profit is high, government's tax also is high. If profit is low, government's tax also is low. So government is also equally interested in your business. So like that, there's so many other people also who are interested in the reports of your business. So you have to communicate all the information to the users of financial statement. With this, the accounting process completes. It starts with identifying a business financial transaction and it completes with communicating the same to the users of the financial statement. Any problem, online people? Yes, boss. English, if you ask, no others, if anybody does not understand. If you're exporting the goods, yeah. Yes. Yes. Before 2 months, it was like 70, for example. Now it's raised or reduced to 60 or 65. Then from my account, from one month later, I should change it or I should just leave it like that. See, there are two things. What Naman is asking is, sir, in case if I'm into the business of exporting goods and services. So today I'll be exporting the goods. So today, let's suppose we are exporting to Australia. So we will receive money in Australian dollars. So today the value of the dollars will be different. And the money let's suppose you receive 1 month later, that time the dollar value will be different. So obviously in your bank account, you will get only that money or that conversion rate that was existing on the receipt date. So after 1 month, on whichever date you're receiving the money, on that date, whatever is the live rate per dollar, that is the rate what you will receive in the bank account. And the same rate you will apply for converting the dollars into INR. For example, Australian dollar price is how much? Let's suppose 80 rupees per dollar. So 80 rupees, and let's suppose you're receiving 100 Australian dollars, 100 AUD, Australian dollars. So what is the money that you received? 8,000 rupees. So on the day of receiving the money, whatever is the currency exchange rate, that rate you will receive the money, and that is the rate in which you will record the sale value. So have I answered your query? Is that your query? Perfect. Now, so just like we have a cycle of understanding the English language, it starts from understanding how the alphabet is, pronounced, or knowing the alphabet first of all, then converting such alphabets, or putting all the alphabets into meaningful words. Then the words are comprised together to make meaningful sentences. Then sentences are put together to form a meaningful para. Then followed by chapters and book. In the same way, guys, for accounting also you have to follow the same steps and procedure. The first step is identifying a business financial transaction, measuring in terms of money, then recording through journal, classifying through ledger, then summarizing through trial balance, trading P&L and balance sheet. Then from there, what will you do? You analyze and interpret, and then that information you will communicate to the users of financial statement. This cycle you have to follow throughout. Now, what you have to understand is that right from the process of identifying till classifying, identifying, measuring, recording, and classifying is done by a junior accountant. It is done by a junior accountant. And this process of identifying, measuring, and recording and classifying is called as a bookkeeping. After that, the next step what starts is summarizing, interpreting, and communicating. Now, these three steps is being done by a senior accountant or a chartered accountant. So this process is called as accounting. So accounting begins where the bookkeeping ends. Now, bookkeeping and accounting are two different activities. Both are not same. And what is accountancy? Accountancy is a rule book which will teach you how to do the bookkeeping and how to do the accounting. So are you clear with the difference between bookkeeping, accounting, and accountancy? Bookkeeping is different, accounting is different. How to do bookkeeping and how to do accounting is something that you learn from the word accountancy. So from theoretical point of view, this concept is very, very important. Now, guys, what is the primary motto of preparing the accounts? To find the profit and loss, to calculate the correct profit and loss of the business. This is the first and the foremost motto. This desired result is achieved by preparing one document called as trading and profit and loss account. The first and the foremost motto of preparing accounts is to find out the profit and loss of the business. There are multiple motto. In that, the first and the foremost motto is calculating the profit and loss. And that is achieved by preparing a statement called as trading and profit and loss account, in which you record all the information regarding income, expense, gain, and losses. It is called as trading and profit and loss account. In the business, just knowing the profitability, is it sufficient? No, we also need to ascertain the financial position. If I may give an example, the very same example that we took in the last class regarding the phone. So guys, this profit and loss account was your motto, right? So you calculated this in a particular way. Initially, all of you calculated in different way because you did not know the procedure. Once you knew that, okay, I need to record only that much expenditure to the extent that how much quantity is being sold, then you realize, acha, this is the way of calculating the profitability. So the process of getting this profit or this profit is obtained by preparing a statement called as trading and P&L account. So this result of this 1,10,000 rupees is achieved by preparing a statement called as trading and profit and loss account. But we are not okay with only this information. We need additional information. I also need to know in the business, what is the cash position? How much money is left with me at the end of the day? So we prepared another statement called as cash position statement, wherein we understood, acha, this is the total money that we received by selling the phones. This is the total money that we paid. The cash outflows happened for purchasing the phone. This much money we have paid for doing the selling related expenditure. So at the end of the day, the cash that is left in my hand is 70,000 rupees. So profit and loss account will not tell you what is the position of each and every item. Profit and loss account will tell you the desired result, the end result of the business, whether you are in profit or in loss. That's it. How much money are you having in your hand? That trading and P&L account will not tell, because the profit and loss account is not designed in such a way. So to know the position of each and every item, you have to prepare a new document called as a balance sheet. Balance sheet. So if I want to know what is the position of stock, means what, sir? You purchase initially 10 quantity of phone. How much is sold in that? You sold 6 quantity. So remaining is how much? 4. So if you don't prepare this data, how will you know that how many stock is left with you? Correct? No. As the owner, should you not know what is the stock that is left in your godown? Obviously. So all this position, how much, what is my cash balance? What is my bank balance? What is my stock balance? If I need to remember, let's suppose in business, you will sell goods to a lot of people who would say that, sir, we'll pay the money later. So I need to remember all those gentlemen's name, no? From whom I have to collect the money in future. So where will I record the data, boss? Balance sheet. In business, we will also buy goods now and pay later. So we have to remember, to whom all to make payment, what amount I need to make the payment. I also need to remember, So we human beings are like Gajani. We remember everything today and tomorrow we forget everything. Like how you forget accounts. Last class what you learned, today everything is forgotten. Same way, even in business also we tend to forget. Why? Because in business there are so many transactions that is happening day in and day out. So many people you meet with, so many people you do transaction. How will you remember everything in your mind? So your brain is replaced by balance sheet and your heart is replaced by the statement trading and profit and loss account. Online people, am I clear with what I'm trying to say? Hello?
Yes, sir.
Yes, sir.
Perfect.
Yes, sir.
Perfect. So to ascertain the financial position, the document that you're preparing is called as a balance sheet. Balance sheet. So in this, what do we record, sir? We record all the assets, liability, and capital. What is asset? What is liability? What is capital? Is what we're going to discuss in the next topic, which is basic accounting terms. So these both documents put together, guys. Trading and profit and loss account. Again here, trading and profit and loss account and your balance sheet put together is called as financial statement. It's called as financial statement. So whenever you come across the word financial statement, means trading and profit and loss account plus balance sheet. One more time. Whenever you come across the word financial statement, it means what? Trading and profit and loss account plus balance sheet. Both of them are put together called as financial statement. Now this financial statement is nothing but, guys, it is a report card. All of you understand very well report card, no? Who else than you guys would understand the significance of the report card? Sir, all the report cards, all reading. Out of 80, we are scoring 30, 35, 40. How many like that in 10th? Raise your hands. Jain is laughing. Sir, why, sir? Why old memories are haunting? Again, triggering it. Others? Remember, no? So the report card, what school gave you, that was to measure your study performance. to measure your performance in the field of education. Same way, guys, here the financial statement is a report card which will evaluate the performance of the business. So this is called as a report card which will evaluate the position of the business, how strong the business is, how weak the business is. You will get that information by reading the financial statement. Am I clear? Online people, hello.
Yes, sir.
Yes, sir.
Perfect. Fantastic. Now, guys, if you see this introduction to accounting, this line, I spoke about in depth, right? And the information about this is given in detail in the next page, guys. If you see identifying a financial transaction event, measuring the identified transactions, recording, classifying. So whatever I've discussed is there. So I want all of you to take this as homework, read these points. And in these points, if you have any doubts, you have to get back to me. Now, I'm not going any further than this because from here, the rest of the topic, if I read, things will go into your mind as an English language, but nothing will register in your mind because here there are so many terms they're using which you are not even familiar with. So if I take this objective of accounting or if I take any other upcoming topics, it will only sound meaningless. You will understand it because all of us know English. So by reading English, you'll understand what they're trying to say, but you will not be able to accept it wholeheartedly because you don't know what it is. So from here, I'm straight away moving to the next topic, which is second topic. The second topic, which is basic accounting terms. Sir, does it mean that you will never do the remaining of the first topic? I will do it. In that, few topics of the first chapter will get covered as and when I do the other topics, as and when I do the practical question. And few topics in the first chapters I'll connect it to all of you at the later stage, so that everything we study should be in a proper sync. Same way, guys, in basic accounting terms also, there are certain terms which I'll do it now. Because if you don't know such terms, you will not be in position to do the upcoming practical questions. So I told you very clearly in the last class, we will come across 3 types of theory questions. One is that theory questions. If you do that theory only now, then only you will be in position to understand the remaining topics. Then you will come across the second set of theory, which have to do parallelly along with the practical questions. And third, you will come across such theory which have to do after the practical questions are getting over. So believe in the process, guys. I've done this for the last 4 years, and this has given a best understanding to all my students. And same thing I'm applying for all of you. So you might find I'm deviating from what your school is taking, but trust me, the process what I'm going through, that is the right process to give you a real experience of accounting. If you want to understand the accounting subject through heart and soul, you have to go through the process what I'm taking through, not through the process what your school is taking through, because you will not understand anything out of that. You will only by heart, but not meaningfully adopt anything. So today we'll be heading towards few basic accounting terms, which is important from the upcoming chapters point of view. So chapter 2, guys, which is basic accounting terms. So before we head forward for this, do you have any doubts in the concept that I've discussed so far? I don't expect you to become a pro in accounting as of now. Just whatever I've explained, do you feel it is easy to understand? Anywhere at any point of time you felt that I said something and you didn't understand at all? Like that, if there is any point, please let me know. I would want to clarify that and then go forward. Agarshana, Nitya, Pratyush, Rohit, Sandhya, Shreya, Tara, and Mansh. Do you have anything which you want me to explain one more time? Or am I good to go forward?
We can go forward, sir.
Balance sheet will be explained in depth in the basic accounting terms. Term wise, if you have anything, term wise, everything, most of the things will get captured here. Yet there'll be certain terms which I'll not capture it here because I'll capture it as and when we do the upcoming practical questions. Anything else? Can I go forward? Fantastic. Now, the first accounting term that we are going to learn is books of accounts. What do you mean by books of accounts? Because very commonly we'll come across this term called as books of accounts. The place where the financial transaction of a business entity are recorded is called as books of accounts. Now, guys, this is something which is dated back several years ago when there was no system in place. There was no computers. So in those olden days, how do you think people used to do the recording? By writing through books. So what happened is same procedure. They never deviated from the procedure. identifying a business financial transaction, measuring in terms of money, recording through journal, the same procedure. Even this is not that now, guys. This is being followed from thousands of years, right? But why do we call it as books of accounts? Is because when in olden days the accounts was prepared, it was manually written. So for journal, guys, if you remember journal, we had a separate set of book. And the transaction in journal is not one or two, guys. There is hundreds of thousands of transactions that is happening in the entire year. So sometimes what happens is for journal, one book is not sufficient. You'd have multiple books. So from journal, you have to post all the transactions where? To ledger. So for ledger means purchase account, separate book, sale account, separate book, purchase return account, separate book, salary account, separate book. So for every type of transaction, separate book. From ledger, you have to post it to trial balance. So for trial balance, separate book. For trading P&L balance sheet, not a book, small book is enough. But all this put together is called as what? Books. One single means book. Multiple means books. So what are these? When I'm preparing journal ledger, what is this for? Accounting purpose. So these put together is called as books of accounts. Now today, all the accounting is shifted, to systems and softwares. Today we use Tally, we use Oracle, we use SAP. But still today also we refer them as books only. So if you go and read a journal inside a system, that journal is a book. Still, we are continuing the same language called as books of account. We don't use the word saying that computer of accounts. We use the word books of accounts only. Even now, we are habitual to that only. So if you see here, I have given a stack. I have given an image here. If you see here, the books are stacked. So what people do here is that when you buy any goods, you take a purchase bill. If you sell the goods, you have a sale invoice. So for every transaction, you have a supporting evidence. All this supporting evidence has been filed. Even these documents, what you're filing is called as books of accounts. So what people do is once people, not now, a couple of years ago, even people when they record in the system, they used to take a printout of that and keep it in the books, in the files. So that's the reason even now people call this as books of accounts. So if you see here, this could be one book for journal. This could be for ledger. Like that, these books are for multiple purposes. So all this put together is called as books of accounts. So even now we still use the same word despite migrating from manual books to the digital books, which is systems. Still we use the same word called as books of accounts. So anybody's got any difficulty in understanding the term books of accounts? Hello? Online people?
No, sir.
Easy? Perfect. Second is business entity. Business entity means what? No, I'm not telling business entity concept. Business entity concept is different. What do you mean by entity? Organization, exactly. Guys, in accounting, for example, if we have Annapurna, so what do we call Annapurna? We'll call it by name, but what is the formation of that Annapurna? We call it as entity. We call that as enterprise. We can call it as organization. So business entity is basically the way you refer a particular organization. FFLA is a business entity. Kalparish Academy is a business entity. Entity means you're trying to refer to an organization, to be kept in very simple terms. So business entity or business enterprise. So and so business is an enterprise. What form it is? So we call this as business entity, organization, or enterprise. Any difficulty in this? How do you refer a business? What is a common term you call? We call them as entity. Now entity could be profit entity or non-profit entity. That is a different. Profit entity means what? A business which is started with the motive to make profit is called as a profitable entity, profitable enterprise, or profitable organization. But anybody who's formed an organization, formed an entity or enterprise, but the motive is not to make profit, it is called as a non-profit entity, non-profit organization, or non-profit enterprise. So NGO, for example. So basically any form in which you're doing business or not doing business, any organization you form. So here we don't use the word organization. Here the technical word, what they use is entity. We have to use, in accountancy, we have to use polished words. We cannot use normal gentle words. We don't accept that. We want some new invention for ourselves. We want some fancy word for accounts. Only then we can digest it. So that's how organization ka meaning is entity. To put it in very simple terms. So anybody has got any difficulty in understanding the word business entity?
Sir, can you repeat the meaning?
Business entity is nothing but organization. You understand what is organization?
Yeah.
So organization ka synonym is entity.
Okay.
We have given a different word to it. That's it. So entities
Okay.
are two types: profit making entity, non-profit entity, non-profit making entity. So are you clear with this too? Profit making and non-profit making.
Yes, sir.
So what do we say? So Annapurna means, what do we say? We say it is a business entity whose motive is to make profit. So it is a profit entity. If their motive is not to, for example, you know this, I forgot the name. There's one organization who gives free food, no? In Coimbatore we have, what is that? Shanti Gears. So there's an organization who will give food at free of cost, and sometimes they give it a very, very minimum price. For example, if you go and buy sapad, I think it's as good as 20 rupees or something like that. So the motive of having such organization is what? Not to make profit. With 20 rupees giving a sapad, what will you make? What profit will you make? So how do we refer this organization as? In business, or sorry, in accounts, we refer them as entity, as non-profit entity. Am I clear? Pratish, you raised your hands. Any doubts, ma?
Yes, sir. Sir, so for organization, does it have to be multiple people, or can it also be like one sole proprietor of a company?
See, organization, if you take per se, the word organization means it is large in number. So the reason why we don't use the word organization is because in accountancy, even one single person who's doing business can do business. So can I call that one single person doing the business as organization? No. So we
No.
call them as entity. So that is one of the primary reason why we use the word entity or enterprise rather than the word organization. So when you use or refer something as organization, it is group of people working together. But in India, there are a lot of businesses which is run by one single person. There's no staff, there is no other support. There's only one system running it. Sorry, one person running it. So can I call that person as organization? No, organization means it is group of multiple people. Then how on earth should I refer a person who is doing the business as a single-handed guy? So we call them as an entity or an enterprise. So organization does not mean a single person. It is a group of person. To differentiate, that's why we created something called as entity. Have I answered your query, Pratyush?
Yes, sir. Thank you.
Perfect. The third term that you need to understand is accounting period. What is accounting period? Okay. See, what happens is that when you start a business, do you start a business with the motive that, okay, after 1 year, after 2 years, I'll stop my business, I'll close my business? Online people, please respond. When you start a business, do you start with the motive that after a couple of years, I'll close down or shut down my business? With that motive, do you start?
No, sir.
No. So you want to continue the business for a foreseeable future. Foreseeable future means as long as it is possible, we want to continue the business. That is the main motive. So what happens with that intention? You keep on continuing the business year on year. It keeps on going. Now, what government said that, see, we want you to do business for as long as is possible, but somewhere you need to stop. Why? Two reasons. First, for owner himself, he has to stop, turn back and evaluate that how his performances has been throughout that particular period. Because if a business continuously keeps on going, if it does not turn back and see, how did I perform? Whatever target I set, did I achieve the target or not? So for a second, you have to stop and analyze, right? If you see the process of counting, the last before step was what? Analyzing. So if the concept of analyzing was not introduced, people would not have analyzed the business. People would have continued the business. So they said that as an owner, don't you want to know whether you are performing properly or not? Then businessman said, yes, we definitely want to know. So which means that you need to break the accounting period. You cannot continue with the accounting throughout. You cannot do the accounting for straight 5 years and say my 5 years ka profit is so much. It is too much. 5 years is a huge time for us to understand this is the profitability. So those n number of years was broken down into multiple parts, and that part was for 1 year. So the government said that since we have a calendar year for 12 months, so we'll break the accounting period also for a period of 12 months. So you will do the accounting only for 12 months. So after every 12 months, you have to put a full stop to the accounting. You have to analyze what you've done throughout that 1 year or throughout the 12 months and check for yourself whether you have executed as per your plan or not. If you have not executed, it is high time for you to analyze or identify those measures and rectify those measures. Point number one. This is in the favor of businessmen. Second, government wants to put a full stop. No? Because if you do continuously accounting for 5 years, let's suppose, you will not pay tax. Because if the accounting period concept was not there in place, you will do the accounting throughout. If you do the accounting for straight 5 years, and if you don't stop, obviously you will not calculate the profit. If you don't calculate the profit, government will not get tax. Why is government requiring the tax? You know, government's major source of revenue is tax. Major source. Why? Because if the government is not having sufficient tax, how can they do the public infrastructure? For example, you have government hospitals, you have government colleges, you have government schools. The railway track that is laid by whom? Central government. When COVID was happening, who prepared the vaccine? Scientists prepared. Government didn't prepare. Scientists prepared. But will scientists do this free of cost? So government has to pay money to the scientist also. So why will he or she do it? Now, when government made this, government identified the scientists to make this vaccine. So scientist has created the formula. He is not a big guy to manufacture. No, you have to manufacture crores of vaccine. So who manufactured crores of vaccine? Pharmaceutical companies. So pharmaceutical companies, when they manufacture, they'll not do free of cost. No, they will charge. So who paid a major amount of cost to the pharmaceutical companies? Government. So from where did the government get money? From us. So ultimate person who's bearing all the heavy weight is we only. So we are only sponsoring government. So government says that, boss, if you keep on continuing the business throughout the year, if you don't stop anywhere in between, you will not calculate the profit. How will I get my tax? So government said nothing doing, stop in between and calculate the profit. On that you pay tax. So they said that, okay, let's take a gap of 12 months. Like after every, one period, you have a gap of, after some 2-3 periods, you have a gap of half an hour, school break. No, when do you have school break? Like you have initial, how many periods first? 4 periods, then you have how many minutes break? 20 minutes break. Then after that, how many periods? 4 periods again. Then how much break? No break. Over. You guys are way bad. My school was much better. We had initial some 2 periods or 3 periods, then half, I think 20-25 minutes ka breakfast ka break. Then again 2-3 class over, again 11-10 there was a break. So that is again for 10 minutes. Then 12:40 school over. 12:40, 1 o'clock school over. I think we had a better life than all of you. Anyways. So like that, boss, a break is required in the business also. No? So that is how the accounting period is coming to picture. Now you will say, sir, accounting period 12 months you said. Starting with what? Ending with what? Now here we start. In accountancy, we start. The starting period begins with April, ends with March. Now you may wonder, sir, we follow calendar year. Calendar year is Jan to December. Then why April to March? Now there is multiple reasons. Nobody knows these reasons. I'll give you a few reasons what I have learned. So a lot of people say that this culture was there from, when we had this foreigners invading us. No? That is, before Indian rule, we were with Britishers, and before that all we were with Mughals. Correct, no? So when Britishers came inside, so what happened is these people had business enterprise entities across the world. Like, East India Company. So East India Company was like operating in eastern part of India, but they were operating multiple other places as well. So what used to happen is they used to collate all the accounting information together to make a single accounts. For example, Indian accounts, other countries' accounts, they wanted to consolidate all the accounts together. So what used to happen is they used to follow Jan to December as the accounting period, but December accounting used to get over. And by the time from those countries, the accounting reports used to come. And by the time we used to consolidate, it used to become 3 months. So what they said is, anyways, from December, it takes 3 months of time for us to get the reporting. So what we do better here, in foreign still Jan to December only. Here what they've done is April to March. So what happens in foreign, they prepare the accounts Jan to December. So this report has to be consolidated with the Indian reports. So in those olden days, by the time the information used to come, let's say this is Jan to December. By the time the information used to come, it used to become 3 months approximately. So what happens? Only by March end we got the data, and then we consolidate all the accounts on 1st of April. So which means we took 31st of March. Till 31st of March, we took time to account everything. So that's why in India, the system what we follow is still April to March. This is one explanation what people give. Second explanation what people give is that in India, your cropping gets over by March. And right from April onwards, you sell your business. Actually, the cropping sale, whatever the crops you grow, once you harvest it, when the sale process begins, it begins from April, which means people from April till March, they sell the crops here, they regrow the crops here, and they harvest the crops here. So the cropping cycle in India, what was followed was April to March. So people felt that India is an agri-based country. Now things have changed. Several years ago, our predominant business was agriculture. Now it is real estate. But earlier it was agriculture. So when agriculture was the most done business in our country, so they felt that we should align our accounting period with that of the crop system. So back in those days, the cropping system was April to March. So you remember somewhere around Pungal, they used to harvest it. So by the time they make all the arrangements to sell, it becomes March. So they harvest somewhere in Jan and Feb and March, till Feb and March, all the crops are sold. That's when the entire sales cycle is completed. By March, the sales is all over. Again, from that summer, they'll start cropping. From April onwards, they'll start cropping. So again, the crops is, the seeds are sown, the process is done, then the crops are grown. In Jan, again, harvesting is done. By March, it has been sold. So that is one more reason why they say that they follow April to March as the accounting period to match with the cropping system. And still now also we are continuing. It's not that we are not trying to change. Several instances has been taken by the government to change the financial year from April to March to Jan to December. But those attempts have been futile due to various reasons. So let's not get into all that. But there are efforts to make a common, because in so many countries abroad also, they follow Jan to December. There are very, very few countries who follow April to March. Majority of the country, they follow the calendar year, Jan to December. So this is also one of the reasons why we're following April to March. So definitely to align everything in the same level, all the countries should have common financial year. For that purpose, the efforts had been taken, but still there is a lot of difficulties that government is facing. So that is why still we are not touching this. April to March is kept as a financial period. So accounting period is also known as financial period. Okay, not okay? So we've discussed 3 terms so far. Anybody's got any doubts? Online people, hello. Agarshana, Nitya,
No, sir.
Pratyush, Rohit,
No, sir.
Sandhya, Shreya, Tara, and Vansh.
No, sir.
Yes. So now, guys, your financial year starts with April and ends with March. Now, please understand. Just one small point, then I'll give you a small break. So this is 1 year. This is second year. So this is a calendar year, which means it starts with. This starts with Jan, ends with December. Now let's suppose this is 2023 and this is 2024. This is again Jan, December. Now you may ask a question, sir, is it compulsory that we have to follow only April to March as a financial year or accounting period? The answer is no. But people follow April to March because income tax rule says that we will accept accounts only April to March because we want common accounts. We don't want one doing Jan, December, another doing April, March. So income tax department said very clearly, we want April to March. Accounting wise, you do whatever you want to do. If you want to report that to your users of financial statement, you are free to change whatever you want to change. But when you submit the same report to us, we want only April to March. We don't want a different report. Why? Because, see, please understand, sometimes the government wants to compare your business report with that of another business report. So, for example, let's say this is FFLA. Let's say FFLA is separate, Kalpriksh Academy is separate. Now, FFLA is preparing the accounts from Jan to December. Kalpriksh Academy is preparing from April to March. So what happens? The data is different. Can you do the comparison? If I want to compare the report, who is doing better? So this fellow is having, let's say 10 lakh as your turnover. And this guy is having, 12 lakh rupees as your turnover. Can I compare this and say that this is better? Arey Baba, this fellow is doing turnover in April to March. And this fellow is doing in Jan to December. In academic or in certain businesses, there is certain peak period. So this person may consider this peak period differently and this person may also consider it differently. Therefore, if you have different financial year, the data is not comparable. Data should be comparable. Only then we'll be able to tell which company is better, which company is not better. If the base is not same, then the comparison is no use now. Because this is prepared on different basis. This is prepared on different basis. How can you compare the data? As an investor, can I say this company is better? Not possible. The data is different. This data is different. So therefore, to ensure the comparability, government said that we will only follow one financial year, which is April to March. Accounting wise, you do whatever you want to do. The problem with businessman was, for our accounting purpose, we do Jan to December. For income tax purpose, we have to do April to March. Who will prepare accounts twice? So everybody in India said that better we follow April to March. No need to have extra unnecessary headache. So everybody unanimously follow April to March. Now, if your financial year is starting from April and ends with March, it starts with April. So it is April 2023. Am I right? March is ending here. So it is March 2024. Am I right? Now, these both put together, how it is referred as? It is referred as financial year. FI stands for financial year 2023-24. So whenever you come across the financial year 23-24, it means the financial year is beginning with April 2023. It is beginning with April 2023 and ends with March 2024. It begins with April 2023, ends with March 2024. So whenever you have 2 years together, why 2 years is together? Because April is belonging to different year, different calendar year, and March is belonging to different calendar year. So when you're taking 2 different calendar years ka data, then we cannot call that as only 2023. Because if you just call that financial year 2023, it is wrong. Because here April is 23, boss, but March is 24. So March will feel bad, no? That you're only taking the 23 ka year. If you write only 2024, who will feel bad? April will feel bad. So we have to take care of both of them. So we said that 23-24. So whenever you come across the term financial year 23-24, it means April 23 to March 24. Will you forget this? Hello? No. But in some cases, the entity follows only the calendar year, which means what? Jan to December. So in that case, how the financial year is represented? It is represented as 2023 only, because it starts with Jan 23, ends with December 23. So we cannot say 23-23, no? Is this cricket 2020? So here, when you're using the calendar year as a financial year, you will use only that year as a reference. So financial year 23 means what? 2023 fully. Starts with Jan, ends with December. So in practical questions, you will come across 2 types of financial year. Financial year 23-24 means 2 year, April to March, April 23 to March 24. In the question, if they gave you only financial year 23 alone, which means starts with Jan 23, ends with December 23. Any doubts in this, please? Any doubts in this? No doubts? Can I go forward? Okay, let's take a quick break of 6 minutes. We'll come back and continue after 6 minutes. 7:55 sharp, we'll continue. Yes, people, welcome back from the break. So let's continue. So the next term that we have to understand is what is cash transaction. So transaction is basically of 2 types. We are talking here about types of transaction. So 2 types of transaction. One is a cash transaction. Another is called as a credit transaction. So what do you mean by cash transaction? Look at this, guys. I've done a lot of efforts for all of you. Look at this. Animation all I've done. What is cash transaction? Transaction which involves immediate cash receipt or immediate cash payment is called as a cash transaction. If you can see 2 gentlemen on the right hand side. So this guy is holding some box. For what purpose? To sell it to this gentleman. Look at his smile. How much happy he is. 6-pack, where is 6-pack for it? This is all taken inside. Selling goods. So can I say this guy who's selling the goods is called a seller? And the person who's buying it with a such huge smile is called as a buyer. And I'm sure this guy must not be a parent, because when parent buys something, he'll buy something but not with smile. So definitely this should be you guys who loves to spend parents' money. So you're happy that you're getting some goods on somebody else's money. So seller is selling goods to buyer. And can you see that buyer is having some bag dollar symbol? That's money. So he's immediately giving the cash. So a transaction, can I say it is something which is happening between two people? One is seller, business. Second is the buyer, third party. Second, is this involving money? Yes. When I say involving money, it doesn't mean that immediately pay. This good should have some monetary value attached. So is the monetary value attached? Yes. Is it happening in the course of business? Yes. So this is a business financial transaction. So what type of a transaction this is? This is a cash transaction. So cash transaction is a transaction where the goods and services are exchanged, where immediate transfer of receipt and payment is happening, which means what? Cash transaction which involves immediate receipt. So can I say for seller, he's immediately receiving the money. Receipt means receiving the money, or immediate cash payment. So this fellow is making the cash payment. So this guy is the payer of the money. He is the receiver of the money. Immediately the transaction of cash is happening. So these kind of transaction is called as a cash transaction. Anybody's got any problem in cash transactions? Online people, hello?
No doubt, sir.
No, sir.
Perfect. The second type of transaction, we call it as credit transaction. Credit transaction means transaction where the cash receipt or cash payment are not paid immediately, but will be paid or received at a later date. So if you see this diagram, this gentleman is selling the goods, and this guy wholeheartedly is accepting it. Give me. But in his hands, can you find the money back? No money back. Still, this particular person is giving the goods. So selling the goods, now receiving the money later is called as a credit transaction. Now the question that arises is that why on earth would anybody wants to sell goods now and get the money later? You will have a doubt, no? What if this fellow does not pay me the money? So when such risk is involved, then why is a credit transaction existing? Please understand, especially if you are into a large business, if you're a large business organization, all of you know this concept of manufacturer, wholesaler, retailer. Do you know who's a manufacturer? Manufacturer is basically a person who produces a particular product. For example, if I take about this laptop, so this laptop is not a God's invention. This is invented by whom? Human being. So how did human being make this laptop? So first of all, he had all the components, spare parts separate. So the buttons were separate, the screen was separate, the plastic panel or the metal panel was separate, technology is separate. So all of them he put together into one process. So he put all the materials together into a process. And after a process, a product is evolved, right? So manufacturer is a person who produces a product which altogether has a different meaning and purpose. For example, when this laptop was being manufactured, so what did I use for them? I used buttons, screens, panels. So those were known by different name. Their purpose was different. And when all of them are put together to be made as laptop, you create you emerge it as a new product called as a laptop, which has got its own function and utility. It's got its own uniqueness. So that laptop, what the manufacturer manufactures, he will not sell directly to the customers. Now today technology is there. Today technology is there where the manufacturers are trying to sell the goods directly to customer because technology is there. But imagine 40-50 years ago when the internet was not there, when the system was not there. How can a manufacturer reach to a larger audience? So a manufacturer identified a wholesaler. So if manufacturer is producing 1 lakh goods every day. So he will identify 10 different wholesaler in 10 different locations where each one will buy 10,000 quantity. So 10,000 quantity is purchased by each wholesaler into 10 wholesaler. So like that 1 lakh unit is being sold to wholesaler. Then wholesaler will identify small retail shops where this 10,000 goods are sold to 10 different shops. So each shopkeeper will buy how much? 1,000 quantity. Then this retailer will find out the individual customers. That is how a manufacturer reaches to the end user or the end customer. Are you able to follow? So now when a wholesaler and a retailer is buying, he is buying in a bulk quantity. Am I right or wrong? So wholesaler is buying 10,000 quantity in one stretch. So 10,000 quantity, let's say each quantity is costing you 100 rupees. What is the value involved? 10 lakh rupees. If you ask a gentleman or wholesaler to pay the entire 10 lakh rupees in one shot today, Do you think he will have a capacity, or will all the wholesaler have the capacity to make the full payment instantly? No. So to allow the benefit, because if you compel the wholesaler to make the full payment, no wholesaler will come and buy from you. So this manufacturer will lose his business. Same way, guys, the wholesaler, if he is telling that I will sell the goods only to the retailer, if the retailer makes the on-spot payment, then no retailer will come and buy. So in business, or if you want the business to continue, it is important that the big business giant such as manufacturer and wholesaler have to give the credit system to the opposite party so that the business cycle continues, failing which the business process would not even commence. So therefore, the concept of credit transaction is introduced. So now are you feeling justified to have the credit transaction? Because if credit transaction is not there, the manufacturer cannot sell it to wholesaler, wholesaler cannot sell it to retailer. So business will never continue. So to give comfort to the opposite customer, the concept of credit system is come into picture. Now the question that you say is, sir, what if this fellow does not pay the money? See, that is a risk that you have to carry. So when manufacturer is giving the goods to wholesaler, he will definitely scrutinize multiple point of view to identify whether this guy is a genuine guy, whether he's having sufficient strength to pay the money or not. So accordingly only he will select the wholesaler. But still, guys, after all, taking all the precautionary measures, there are people who lose money. What to do? It's a part and parcel of the business. So out of 10 wholesaler, 9 people will be perfect. They'll make the money on time. They'll make the payment on time. There'll be one person who will always delay the payment. Sometimes he will not even give the payment. He'll run away with the money. But that is a risk that you carry in the business. In business, there is a huge risk. That's why everybody is not doing business now. People don't want to take risk. In India, the risk-taking capacity of people is very less. People prefer that going to job. Nicely, go work for 30 days like donkeys, get 40, 50,000, 1 lakh rupees at the end of the month, and nicely buy iPhone, buy laptop and sit nicely. This is the culture. So credit transaction is a situation where the businessman sells the goods to the customer. So for manufacturer, who's the customer? For manufacturer, who's the customer? Wholesaler. For wholesaler, who's the customer? Retailer. So these people, what they do is they tell that you take the goods now, you make the payment aram se later. So both of them will agree a credit period. How much period the goods has to be lent on credit. Which means after how many days or months this fellow has to make the payment, that credit period is agreed between those people. And on that date, he has to make the payment. So transaction where cash receipt is not happening now, or where cash payment is not immediately happening, but will happen on later date, such transaction is called as a credit transactions. Anyone has got any doubts here? Online people, any doubts here? Hello?
No, sir.
No, sir. No, sir.
Perfect. Now, guys, next is purchase. Purchase. Sir, everything that I buy in business, every single thing that I buy in business, can I record in purchase account? Or can I treat it as purchase? The answer is absolutely no. No, there's a difference. If I'm buying a phone, there could be two purposes. Either I'll be selling the phone or I'll be using the phone in the business. If you are buying the phone with the intention to resell, then only that phone, the money what you spent, you will record under the purchase category. So purchase means buying the goods where the intention is to resell. So if I buy any goods with the intention to consume it, for example, I'm buying a phone, I'm not selling it, I'm going to use it, I'm going to consume that phone. So can I record the expenditure or the money spent on that phone? Can I record it in the purchase account? The answer is no. You will record or treat that as business expenditure, but not purchase. See, purchase is also an expense. That is, it is a specific expense. And general expense also is a expense. Both are expenses. But in the accounts, they have told that no, segregate the expense. If you're spending any money, or if you're going to spend any money on that product which you're going to resell in future, then you should treat those expenses as specifically as purchase. And if you're going to consume that item in the business, you should treat it as expense, as pure expenses. If the intention is to resell is not there, then it is not purchase. If the intention to resell is there, then that money what you spend or the money that you're going to pay in future will be qualified as purchase. So this category of resale is very, 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 very important. If I buy goods with the intention to resell, only then that amount spent is qualified as purchase. Otherwise, only as expenditure. The goods will be purchased from whom? Supplier or vendor. If you look at this guy is a businessman. If you can see, he's having a trolley of goods. What is he doing with the trolley? He likes to play with the trolley, so we'll load goods every day. Ding dong, he'll walk back and forth. No. He is trying to sell that goods to both of these people. So the person, so let's suppose we are business. Let's suppose we are business. So this is us. Okay, we are business buying the goods because this is point of view of purchase, no? So we are business. So for business, who is this gentleman? He is technically called as supplier, who's supplying the goods. In other words, he is also called as vendor. In India, we have one more obsession. One person is not given one name, he's given multiple names. When you were born, you were given one name. But no, people cannot digest it. Every Tom, Dick and Harry who comes and visits you will have his own version of the name. So I have my son who is 2-year-old. So when he was born, the name that we assigned to him was Ayansh. But people don't call with that name. Everybody calls with different names. So initial 1 year, he was referred by 12 different names. 12 different names. Now, we made people understand he is not Chunnu, Munnu, Punnu, Punnu, Tunnu, no. He is only one person, Ayansh. Like that, I'm sure all of you also have a nickname. At least one more name is there. How many of you have one more name? Be honest. Chintu, Mintu, Pintu, Ina, Meena, Dika. Correct? No? Even I have 2 names. I'll not tell my second name. Online people, how many of you have 2 names? Raise your hands. How many of you have 2 names? Pet name. We call it as pet name, no? How many of you have pet name? Nitya, Agarshana. That's all. Which means Pratyush, Rohit, Shreya, Tara, and Vansh don't have any other name. What a waste of your life. Gone. People are blessed with multiple names. In same way, in business also, you refer people with multiple names. So this fellow is supplying the goods is called as a supplier, is also called as vendor, is also called as creditor. Now, what is meaning of creditor? I'll explain properly in the next class because we have a separate explanation for the word creditor. Out of excitement, I just told this word now. So these are the 3 different names we would refer the person who is supplying the goods or the person from whom we are buying the goods. He's got 3 different names: supplier, vendor, and creditor. So what is creditor? We'll discuss when we do the creditor topic. So goods will be purchased from supplier and vendor. Second point clear. Third point, purchase can be of 2 types: cash purchase and credit purchase. So if you look at this gentleman, he is buying the goods here, but in his hand, he does not have any money. So which means he's buying the goods. He's not going to make the money now. He's not going to make the payment now. He's going to pay the money in future. So what type of a transaction? This is credit transaction. Specifically, it is a credit purchase transaction or a purchase credit transaction. Clear? So he's buying the goods on credit. So it is called as a credit purchase. The other person, if you see here, he's buying the goods and immediately he's going to give the money. So this type of transaction is called as a cash purchase. So 2 types of purchase: cash purchase, credit purchase. In cash purchase, you receive the goods, immediately pay the money. In credit purchase, you receive immediately goods, but you don't make the payment immediately. You will make the payment later. Any difficulty in this? Hello? Online people?
No difficulty, sir.
No difficulty.
No, sir.
Now, you will very often come across this word called as goods. So what do you mean by goods? Goods are physical items. Physical means something which you can touch, which are purchased with the intention to normally sell or resell. Normally, goods in business refers to something which we can touch. See, in India or in world, you can do business of only 2 things: either goods or service. Now, what am I doing? Service. So can you physically touch accounts teaching? Oh, sir is, talking something in accounts. Hey, touch. Can you touch? So it is invisible. So I'm giving a service to you. So let's suppose we took an example of that phone. So that phone is, can I say goods? Because you can physically touch it. Tangibly, you can touch it. So in India or in world, forget India, in world, if anybody wants to do business, either he can deal with product, which is goods, or services. So goods means something which you can physically touch. So when somebody deals with product, normally what does he do? He sells or resells it. This is the ultimate mode. Sells means what? He will manufacture and sell it for the first time. Resell means what? He will buy it from somebody else and resell it to somebody else. So goods normally refers to something which you can physically touch. And what is meant by service? Service means exchange of intellectual. Correct, no? So what am I doing? I'm trying to share my intellect with all of you. What is intellect? So don't use all these big words, sir. It is out of our brains. Intellect is very normal word. Intellectual means somebody is using their knowledge. Somebody is using their skill set to teach. Knowledge is different, skill is different. Both put together, if you incorporate, it comes as a better service. So you cannot touch it. Can you touch service? Not possible. So service is another kind of thing. So service, all of you clear? What is goods? What is service? Okay. Now, what is manufacturing? What is manufacturing? The process of converting one goods into another goods with different identity. That process is called as manufacturing. If I have to take example, I like cake a lot. So let me take example of cake. So this happened to all of us in COVID. I don't know whether you had encountered this problem or not. I faced this pressure from Instagram world. That one morning I opened Instagram page. My one of my friend, he's put that chef cap, apron and all, he's baking cake. I ignored. Let him do. Second day, second person is doing same thing. So when so many people put on Instagram, there's a peer pressure on, from wife. See, this fellow is cooking, that fellow is cooking. Somebody is making pasta, somebody is making spaghetti. The only thing what I can help or do is, I told Maggie. That is something which I can do. Nothing more, nothing less. But I'm fond of sweets. So I told my wife one day, okay, let's do one thing. Let's manufacture cake. Because we are accounting people. So we don't use the word baking cake at all. We use specific language. We want polished language. It's a manufactured cake. So I asked her, for manufacturing the cake, what is required? So we use something called as word ingredients. We use word ingredients. In accounting, we don't use word ingredients. We use raw materials. So what is the ingredients for cake, please? Hey, maida is stiller, man. Don't local language. I don't want. I want proper English language.
Flour.
It's not called as flour. It's flour. I got to know about this only when I started baking cake. So that time somebody said it is not flour. It's flour. Okay. Then next. This flour is also called with some other name. All-purpose flour. So some name is there. This also see obsession. Not one name, multiple name. Next, sugar. Oh, vanilla essence. I like orange essence. I don't like vanilla essence. I like orange cake. So orange essence. Then baking soda. Baking online people. If you don't interact, no, it'll be very boring. You interact with me, you'll have fun. I'm telling you, learning is fun. Hey, candle ingredient में थोड़ी आता है.
Butter.
Butter. I am talking about direct ingredient. Milkmaid. This milkmaid is also known by one more name. Condensed milk. This I got to know only that day. Then what, man?
Chocolate.
This is enough. Salt, light, salt pinch. For orange, apart from putting orange essence, that is not ingredient, man. You grate the orange also. Butter put no already. Orange. So okay. Come out of emotions. Come. So these were all the ingredients we got it. Now the problem with person like me who does not know cooking is in what quantity to put. Because if I put everything equal quantity, I'm gone. So I told my wife, I want to make cake. I'm Pavam fellow. I want to put some Instagram post. So help me make a cake. So she gave a weird look. You are making cake and you are asking me to take the ingredients. What nonsense is this? I was like, Pavam fellow, please help me. So she put all the flour, everything, that quantity she put in that daura. What do we call in English? Polished way. Ball. Okay, yeah. So bowl. Okay, it's fine. As of now, we can manage. So she put everything in bowl. I don't give. I'm making cake. No, I'll mix everything. So I mix properly. So now this flour, sugar, baking soda, baking powder, all these are having independent nature. Correct? No? Until all are mixed together and a process is gone through, all of them are having a different identity. Am I right or wrong? In market, they are known by different name, different purpose. So all these items independently, in accounting, we call them as raw material. So raw material are physical items which are used in manufacturing the goods or the products. It is the basic material or ingredients from which a finished goods, that is a cake, is manufactured. So ingredients means raw material. So now anybody has got any difficulty understanding raw material? Or in people, any difficulty in understanding what is a raw material? Hello?
No, sir.
Not at all. Now what happened? In that bowl, you put all the items, you mixed it. So that becomes a batter. Correct, no? Batter or dough? Batter. Liquid means batter, thick means dough. I'm telling you, I've become a pro now. Now this batter, can I eat it and drink it and say this is cake? This is not completed. So if you are mixing all the raw materials together, and if you're somewhere in between, the process is not completed. You're somewhere in between, like here we were in between batter stage. So that stage is called as semi-finished stage or work in progress stage. Semi-finished product are goods which are partly finished. So in our case, the batter is a finished product or a semi-finished product. It's a semi-finished product or a work in progress stage. What stage it is? Work in progress stage. So these are the two terms you have to be familiar, because we'll be commonly referring to this in 11th and 12th. So these are the semi-finished goods. Now what happens? Once you mix it, you will have to take that heart shape. If you want to make heart shape or different shape, you take that. What is it called as? Tin. You take different shape cut and you put it, and you put it in oven. Am I right? Yeah. Yeah, butter paper, everything fine. So you put it in. Okay, fine. He emotionally bag bhai. So you put it in tin, you bake it. Then what happens? The cake is now ready. So as it is, will you? No, you have to do toppings, decorations. You have to complete the product. So to make it ready for sale. Once all the topping is done, decoration is done, you have a final product with you. That final product is called as finished goods. Goods means what? Anything that you can physically touch. So can I touch the cake? Yes. Spongy. So finished goods are products that have completed the manufacturing process but are yet to be sold to customers. So it is called as finished goods. Any problem with this, online people? Hello?
No, sir.
No, sir.
So what do you mean by manufacturing? Manufacturing is a process where you collate all the ingredients, all the different ingredients or raw materials, which has got its own unique different feature. You bring all of them collectively to one place. You put them through a process. You undergo a process, or you make them undergo a process. And after that process, you get a different product, which has got its own unique identity, its own purpose, and it is known by its own different name. So that final product is called as finished goods. So the entire process of putting a raw material here and getting a finished goods on the other side, the entire process is called as a manufacturing process. And the person who does this manufacturing process is called as a manufacturer. Am I clear? So here, if you can see an example, I've taken here, there is a wood logs. So wood is converted into chair. Now this is not completed because the painting is still pending. So once the painting is done, then the goods is ready to sell. So this is a raw material stage. This is a semi-finished stage or work in progress stage. And this is the finished goods stage. Now again, goods are of two types. Goods are of two types. One is finished goods, what we just discussed. Another is called as TG, traded goods. There are two nature of business. Business ka, there is two nature. One is manufacturing business. Second is trading business. In manufacturing, what happens? You buy raw material. You put them through process. You will get semi-finished goods. Again, you put them into process to get the finished goods. So it's a lengthy procedure. Lot of headaches. Lot of responsibilities. A person who does not want to take so much of headache, he will do that. Buy goods, sell goods. Buy goods, sell goods. Like retail shops. What do? Buy it from the wholesaler or manufacturer, sell it. No jamela. So that business is called as a trading business, where you buy goods with the intention to resell. No other process. You don't buy goods A, you don't do any manufacturing process and convert it to goods B. You buy A and sell A only. If you buy B, you sell B only. No process, no different product is getting emerged. So that type of business is called as a trading business. Anybody's got any difficulty? A person who is doing this trading business is called as a trader. The person who is selling the goods, buying the goods and selling it as it is called as a trader. So there are two types of goods. So if I'm running a cake shop, there is two possibilities. I may deal with finished goods. I may deal with traded goods. Finished goods means what? I am manufacturing the cake. Traded goods means what? Let's say cupcake. I don't want to buy the cup. So I don't want to manufacture the cupcake. So I'll identify a person who's manufacturing the cupcake. I'll buy from him and sell it. So if I'm buying the cake from someone and selling it, so that cake is referred to as traded goods. Traded goods. Finished goods means what? It is something what you are manufacturing. So finished goods is manufactured by the manufacturer. So there are two types of goods, finished goods and the traded goods. Any difficulty? Online people, any difficulty?
No, sir.
Perfect. So manufacturing is explained, manufacturer is explained, trading business you understood, trader also you understood. Service. So what we are doing is service. Service is what? Sharing of the intellect, sharing of the knowledge, experience with the skill set. So that is called as service. So in India, you can do business of only two things. Business of goods and services. Either you can be a dealer of goods or you can be a dealer of services. Goods again two types: manufacturing, trading. So manufacturing goods, trading goods or services. These are the only three maximum possibilities in which you can deal with as a businessman. Nothing more, nothing less. Am I clear with what I'm saying? Now, the person who is giving service is called as a service provider. Service provider. So in our case, I'm giving service. So I'm giving service, so I'll be called as a service provider. And since you are receiving the service, you'll be called as a service receiver. Any difficulty? This is accounts, guys. If you understand the concept behind it, you don't have to buy hard. Everything will easily melt in your mind. Do you feel stress on your brain that I have to remember, I have to go home, you have to read this point, like your physics, chemistry, buy hard the formulas? Vijay is like, sir, physics, chemistry, you don't remind us. Science is like that. Physics to a certain extent, it is conceptually understandable. If you have a right teacher who can explain the concept, still it is understandable. But chemistry, bio, zoology, and all, ayyo, Rama. Now, raw materials, all of you clear? Semi-finished goods, work in progress clear? Finished goods also clear?
Yes,
Now
sir.
we'll be heading towards the 2-3 small concepts, then we'll be done with them. We have discussed purchase. Purchase means what? Buying the goods with the intention to resell. You purchase the goods, guys. You didn't like the goods because the goods were not of that quality what you expected. So there is a quality problem. There is a specification problem. Specification means what? You order for HP laptop, but you got Dell. Will you accept it? You want as per your specification. You want as per the quality you mentioned. You got the goods, but the goods were defective. Will you keep it? You will return it. So that process is called as purchase return. So the goods which I purchased earlier, since it is quality problem, since there is a specification problem, since there is a defectiveness in that, you will not keep the goods with you. Rather, you would return it. So in goods bought means purchased. Buy singular. Bought is plural. So the goods that you purchased is returned to the supplier back. That is called as a purchase return. Purchase return is also known by another name called as return outward. I told you, we Indians are obsessed with multiple names. One name is not okay. You want second name also. Now the main problem with the second word is that people often get confused with return outward and return inward. So how do you remember? Very simple logical point. They have given this name with proper logic. Chumma, they have not kept it. Return outward. Now imagine the goods what we purchase. So this is businessman. He is not liking this goods. He is giving the goods back to the supplier. Look at this gentleman. He's taking the goods back. Look at my creativity. Here when the goods is coming in, where is the trolley facing? This side. Now where is the trolley facing? Opposite side. Look at the creativity which I've done for me. Now this person is returning the goods. From the business, goods is coming in or going out? From the business point of view, goods is coming inside or going out? Online people?
Going
We are
out.
business. We are returning the goods. We are retaining the goods. So goods is going out. So can I say this is return outward? Return outward means goods going out. So that is purchase return. Purchase return. So do you foresee to get confused? Return outward means what? Goods going out. I purchase the goods. Purchase of goods is goods coming in. I don't like it. I'm sending it back. Return outward. Outward means goods going outside. See, when outward happens, two things happen. Outward means I'm selling the goods to customer. So that is also outward, but that is sale. So how to differentiate between the two outwards? Return outward means what? The goods which I purchased earlier, I'm returning it. So it's a return outward. The goods is going outside my business to the supplier back. That is return outward. Any problem with this? Online people, any problem with purchase return?
No, sir.
No, sir.
Perfect. Now sales or turnover. What do you mean by sales? Where goods meant for resale are sold to the customer, which means the goods that you purchased earlier with the intention to resell, you achieved that intention, which means what? You have sold the goods. So here we took an example of that phone. How many phones we sold? 6 phones. Each phone is cost sale value is 30,000. So 1,80,000 rupees is, guys, my sale value, or you can say turnover. Now the sale is of two types: cash sale and credit sale. So this is business. So business is selling goods to two types of customer. So when I'm selling to this customer, what type of transaction this is? It's a credit sale. Wonderful. It's a credit sale because this fellow is not having any money in his hand, which means when I give the goods, I will not receive money, which means I'll receive the money later. And now when I give to this customer, he's having money in hand. So this is a cash sale. In difficulty? Online people, any difficulties? Agarshana, Nitya, Pratyush,
No, sir.
No, sir.
Rohit, Shreya, Tara, Vansh. Perfect. Now sales return. Now what happens is, guys, just the way you have the option to return the goods because of quality issue or specification issue or defective issue, same way the customer also can have the same problem. Huh? So your customer had asked for a different quality. You gave a different quality. So anybody will accept. When you won't accept, why will your customer accept? Correct, no? So even you might sell the goods to your customer where the quality is not matching, where the specification is not matching, where the products what you sold could be defective. So why will he or she keep the goods with him? So obviously the customer will return back. Look at the trolley, goods coming to us. This is business. So business is getting the goods back. So this is called as a sale return. When goods sold are returned by customer, it's called as a sale return. Sale return is also called as return inward. So if the return is coming, the goods is coming inside the business or going out? Inside. So return inward means sale return. Return inward means sale return. So do you foresee to buy heart this? Return outward means purchase return. Return outward means purchase return. You need to remember like this. No. If you are getting confused in the examination hall, you need to ask yourself very simple question. Return is happening. Return is outward. Outward means goods is going out. When do I return? The goods what I purchased earlier, I'm not liking it, I'm giving it back. So goods is going out of the business. So it's a return outward. Return inward means what? Somebody is returning and the goods is coming inside. So when will goods come inside? When the customer is returning, the goods will come inside. So it's a sale return. So in examination hall, guys, whenever you have any doubts regarding anything, just ask few questions to yourself. You'll be knowing the answers then and there. But for you to ask that question, you need to understand it logically. To understand logically, you need to be attending the classes logically. So if you understand everything logically, things will set in the proper cycle. You are still down? Right. Yes, boss. Which one? Purchase return. Yes. Yeah. So for business point of view, it is a purchase return. For opposite point of view, it is a sale return. Because for this gentleman, it is a sale. So for him, it is a sale return. Same way here, guys, in our business, this is sale return for us. Let's suppose we are wholesaler. This guy is a retailer. So for him, it is a purchase return. So for one, if it is a purchase return, obviously for other party, it's a sale return. It's an opposite transaction. Correct only. Got it? Perfect. Now, only 2 more points and then we're done. Expense. Expense means cost incurred to earn profit. Cost incurred to earn, income. For example, you go to theater and you buy a movie ticket. So definitely it is a financial transaction. But this financial transaction, what you have incurred, is it helping your business to grow? Is it helping your income to grow? No. So any expenditure which is not helping or which is not contributing to the growth of the business or growth of the income, I will not consider that as my expenditure. So in business, to qualify something as expense, it is important that this expense helps me to earn income. So expense means what? Anything that is helping me to earn the income is called as expense. Any cost incurred, any money incurred in which it helps me to build my business, it helps me to have the growth in my business, which helps me to increase my earning capacity of the business, then that is called as expenditure. Example, rent. So this premises is rented. If I don't pay the rent, can I continue to provide service in this premises? No, they'll kick me out. So which means for me to continue in this place, it is important to pay rent. And the rent, what I'm paying is helping me to earn more income of this business. Same way electricity charges. If I don't pay the electricity bill, can I conduct the classes here? No classes, no income. So can I say electricity charges also is helping indirectly, not directly. Indirectly, it is helping to grow the business. Telephone expenses, transportation charges, stationery expenses. So all the paper, pencil, pen, what we have, it is helping me to do my business. For example, you come here to write test. If I don't provide you any answer sheet to write, what will happen? Can you write the test? So that stationery, what I'm providing is helping me in my business. So all these are either directly or indirectly helping to earn my income. So in business, you will treat only something as expenditure if that expenditure or that cost is helping me to earn my income. If anything is not helping me to earn my income, then I will not treat that as expenditure. Okay, not okay. Only people, okay, not okay.
Okay, sir.
Now here, if you talk about expenses, there are multiple type of expenditure: capital expenditure, revenue expenses, deferred revenue expenditure. So all that I'm not taking here. I told you very clearly that 3 types of theory. First theory is that when I do that theory, you'll understand the practical questions. So this is that theory. Now there are certain other theory which I'll do along with the practical questions. Then comes the third set of theory which I'll do it at the end. So capital expenditure, revenue expenditure, deferred revenue expenditure is something which is done parallelly with the practical topics. Because if I explain you what is capital expenditure, revenue expenditure, deferred revenue expenditure, you will not even understand hidden tail. Because for you to understand that concept, the prior concept is needed to be understood. So that is one reason why I'm not touching those parts. Like that, in this basic terms, if you see, so many topics they have covered, but I'm not covering all the topics. I'm covering only those topics which is very, very important for now to understand. So the terms what I discuss anywhere, have you ever felt that this is very difficult to remember? So I've handpicked only those topics or those terms which is important for you to understand that, so that in the future you will be able to understand the practical questions. So this is expenditure. Next is profit. All of you know what is profit. Excess of income over expenditure. Excess of income. Let's say my income is 1 lakh. My expense is 60,000. So can I say my income is excess? Excess of income over expenses is called as profit. So what is my profit? 40,000 is my profit. Excess of income over expenditure is called as profit. Very simple. Any difficulty? Now, profit is further divided into 2 types: gross profit, net profit. There is one more type of profit which is called as operating profit. Now, if I explain you gross profit now, you will not understand anything. Net profit, not possible. Operating profit, not possible. So when I do the financial statement topic, when I do the topic of financial statement, chapter 18 and 19, that is the point of time when I explain what is gross profit or net profit, it will make sense. Because for you to do financial statement, you should be able to do all this. So tell me, without knowing all this, if I directly explain you what is gross profit, will you understand? Not possible at all. You will just listen to what I'm saying, but nothing will go into your head. So I'm yet to explain you what is gross profit, what is net profit, and what is operating profit. Keep it pending, no problem. Now, how do we calculate the gross profit is given here? From sale, with sale, we add total service, add closing stock, minus opening stock, minus purchase, minus expense, you get the gross profit. Now, why closing stock is added? Why opening stock is subtracted? Why purchase is subtracted? What do you mean by direct expenses? If I start explaining now, you will not understand hidden tail. That is the reason I did not explain you what is gross profit. For me to explain you gross profit, you need to understand what is direct expenses. You need to understand what is indirect expenses. What is opening stock? What is closing stock? Why are we adding? Why are we minusing? At this stage, it is too early to explain all that. So to understand the process, what I'm following is only for you. Correct? Now, online people, are you all with me? Hello?
Yes, sir.
Yes, sir.
Perfect.
Yes, sir.
Next is loss. Loss means what? Ulta. Excess of expense over income is called as loss, which means my expense is how much? 1 lakh. My income is how much? 60,000. So it will be negative 40,000, which is a loss. So excess of expense over income is called as a loss. Any difficulty in remembering this? Loss is further divided into 2 types: gross loss, net loss. Third is operating loss. So all this will make sense in the later stage. how a gross loss is calculated, how a net loss is calculated. Everything has been dealt with in the later stage. So now, guys, all the terms that I've discussed with you, majority of the term is something which is pertaining to the trading and P&L account. Majority of them. I'm not telling everything. Majority of the terms that I discussed with all of you is something pertaining to the trading and P&L. Now, what will we learn in the next class? What is liability? What is capital? What is trade payable? What is creditor? What is drawing? What is loan? What is asset? What is fixed asset? What is trade receivable? All these are the terms. Only if you know these terms, you'll be in position to do the next topic. So next 2 classes, guys, we'll be spending on to just understand what is the basic accounting terms, without which going forward does not make sense. Now tell me, guys, how do you feel about today's session? Good? Am I a good teacher? No response. I have a very bad habit. I cannot take the classes properly unless and until people motivate. So my motivation comes from all the big words. Sir, you are fantastic teacher. Sir, you are stupid, a fantastical teacher. Like that, you have to keep on using such words. Only then I'll take classes properly. If you don't use such words, then I'm not responsible for your non-learning. All right, people. Hello. So one more
Yes,
time.
sir.
My question goes to all of you. Am I a good teacher?
Yes, sir.
Yes, sir.
Absolutely incredible, sir.
वाह बस इज्जत मन में है तो काफी है, उसके ऊपर आने की जरूरत नहीं. Okay. So yes, people, that's all from my side for today's session. I'll see you on the next class, which is on Thursday, 7 p.m. sharp. Until then, bye-bye. See you. Take care.
Sir, when's the next class?
Thursday, 7 p.m.
Okay. Thank you,
Thank
sir.
you.
Thank you, sir.